Okay, let's move on. Let me now bring on board Mr. P.V.K. Mohan, Head Equities with Principal Mutual Fund. Mr. Mohan, good afternoon to you. Thank you for joining us. What do you want to start with, Mr.
Good afternoon.
Mohan? Europe, India, monsoon, or the fact that why Indian markets are holding on despite bad news?
Yeah, I think it's been clearly the market sentiment has turned much more positive despite the big macro worries. And I think partly, the inflows that we've seen in the months of July and August clearly have changed the sentiment, and probably some part due to the fact that nobody was, everybody on the street was really very negative, bearish, and could not fathom a rally in the market. So in some sense, it's surprised most of us, but it's a pleasant surprise nevertheless.
Do you think the rally has staying power? Because last time when we had similar set of circumstances, the market actually cracked after that.
I think the risks clearly at today, risks in the near term are more on the downside clearly, because a lot of this rally probably is, part of it is up on hope that, we'd see more concrete action from the government to address the fiscal deficit, to initiate some pro-growth reforms or policies. So that's something that there is hope, and we haven't seen anything yet which gives confidence that, that's something around the corner. So I think, if that were to continue for a little more time and there's no, if we don't see steps to correct the macro concerns, we would probably see some correction. So on the balance, at this point of time, given the rally, the risk clearly is in the near term is on the downside.
Right. Characterize that risk in terms of how much impact can it have on the market, because year to date, despite all the negative news, we are up 17%, and fund flows tend to amount to about $11 billion put in, especially the recovery from May to now. So, if you're saying that there's downside risk, how much downside risk there is to the market? I mean, how much lower can the market go from here after its recent rally?
I think, that's a slightly tricky thing, but I think could we go back to the recent lows from where the rally started? I think that's clearly a distinct possibility. Anything beyond that, no. I think there is a valuation support that exists for the market at those levels. That's clearly one thing. And I think unless something changes very drastically for the worse, either globally or locally, I think probably we shouldn't be off the lows that we saw recently a few months back.
So between 4,800 to 50...
Maybe a 10%?
Yeah, so between...
Yeah, somewhere there, yes, maybe about a 10%.
Yes. I was just asking about that range. So between 4,800 to about 52, 5,300, that largely is going to be the range for the market?
I think so.
So at a time when you expect, or at a time your view is that the upside is clearly capped for Indian markets, and the downside, on the downside we clearly are open. So what is your portfolio strategy? Are you hiding in defensives?
Yeah, I think, maybe two or three things. One is cash levels clearly, as we see it across our funds, they clearly is on the rise. So that's something, that's the first thing one would do. Clearly, yes, the portfolio biases are towards a little more defensive, or the perceived defensive. Honestly, even those have rallied so strongly that the so-called, the consumer and pharma, which were considered defensive, a lot of them are getting into territories where absolute upside is getting a bit constrained. But nevertheless, because of their earnings momentum, because of visibility of growth, downside probably gets restricted in such shares. So that's one part of our strategy. Third, I think it's also a market where it gives you a chance to really focus more on bottom-up stock picking. And I think if there are macro concerns, if there are concerns related to the monsoon, there would be obviously sometimes some beneficiaries of this. So there are those opportunities to do bottom-up stock picking in India, which I think exists at all points of time. So it's a three-pronged approach.
Fair enough. Stay on with us, Mr. Mohan. We'll just get in some strategies from both our technical analysts. Ashwini, come to you at 255. What would you recommend?
Oracle Financial has corrected for about 4 or 5 days. So this you can buy with a stop about 28.50 and look for targets about 3050.
Ritesh, what about you?
I look to buy into a Hindu exploration. It was doing a range of about 119 to 124.5 kinds for last 8-9 trading sessions. Has broken out today. Can go up to 134 and can be bought with a stop at 122.
Mr. Mohan, at a time when China clearly seems to be slowing down, excepting crude, every major commodity has corrected. Are you betting on commodity producers or are you betting on commodity consumers?
I think it makes clearly more sense to be betting on commodity users. I think the only problem in India's case has been that we've had the rupee depreciating, which kind of nullified some of the gains that would have otherwise come from this commodity price correction. But, as a fund house, we are underweight metals, and clearly we would look more towards the users of commodities or the end users on the downstream side.
What would be a contrarian call in this market right now, sector-wise?
I think in terms of sectors that we are overweight, clearly we have pharma that's a big overweight, and I think we like it not so much only because of its defensiveness, but there are companies within that sector which have reasonably good growth momentum, visibility going into for the rest of this year and into FY14. So valuations have gone up, but probably a little more steam in some of them. So that's one sector that we like. IT is something that we like, and it's not only the usual suspects in terms of big names, but also some of the mid-cap IT names, and they've actually done reasonably well. I think YTD we found a lot of IT, but the big mid-cap ones clearly doing better than the large ones. So that's a name that we like. I think then we find some opportunities in some of the auto ancillaries that tires as a sector has done well. So that's a bit more bottom up. So it's really, if I have to highlight sectors, probably IT, pharma. I mean, these are two names that are probably the large overweights, and some in this auto ancillaries.
Exide 133 rupees. Why are you bullish on auto ancillary? Because at a time when auto sales are slowing down, historically what I've always observed is that when auto companies are under pressure, they always compress and they want more from their suppliers.
Yeah, I think, honestly, you need to see it in the context of particular stocks. There are sometimes some contra plays. For example, I think tires, the companies who are strong in the truck replacement market would actually benefit from an OEM slowdown, because the old trucks, the tires on those trucks tend to run longer. So if you see OEM sales are clearly negative, but if you see the replacement tire market, that's actually growing close to double digits. So that's something so you do have this, but these are, as I said, more bottom-up opportunities, and sometimes this market has been actually extreme in terms of reaction, which means it rewards disproportionately, it punishes disproportionately. So sometimes you get stocks which have probably beaten down a bit too much. So this is really more of a call on, sometimes this sector gives you opportunities, as I said, some contra plays, some really because maybe they've been beaten down too much.
Thanks very much, Mr. Mohan, for joining us. Really appreciate your views and your analysis on the market. Thanks for joining us this afternoon. We'll take a short break on that note, but as we do so,